I'm Aaron Young. Just about everyone is feeling the effects of the rising cost of living, but this can also be seen by the decline in household deposits now into banks. This shows people are spending and saving less money, also suggesting an increased risk of recession. But how likely is this scenario, and can anyone do anything about it? For more, we're joined by Will Banks of Schillings Capital. We have been talking about this concept of recession for quite some time. What is the data showing us?
Yeah, I mean, it's looking very real. I don't think we're in a full-blown recession, but there has certainly been a decrease in the value of household deposits held in Australia banks, which is one of the indicators that can assess that. The Prudential Regulatory Authority said in the last fortnight that household deposits have declined by a staggering 7.76 billion Aussie dollars in June. And as a result now, the average savings ratio of a household is dropped down to 3.7. If you put that into perspective, normally it sits around 5%. As an extreme, it was about 13.5% during the pandemic due to the lockdown. So, this is the lowest level of savings in the last 15 years. So I think it's quite concerning.
Why is it important to have savings?
They're important just because it's a backdrop, it's a support mechanism. So, for example, at the moment where you've got the cost of living increasing, you've got mortgages increasing, sometimes people will need to dip into those savings to bolster their income. As spending continues to surpass the growth of household income, Australian households are being forced to dip into those savings. But for how long can they dip into them, especially if the amount that they're putting aside is now diminishing?
Is this not a sign then that the RBA, the Reserve Bank of Australia, has gone too far, that people, in order to stay afloat, to pay their mortgage or to pay their rent or to continue living, have had to now dip into their savings? There has always been a concern that with rising interest rates they would go too far. Is this now the sign?
I'm not sure it's gone too far. The RBA needed to increase interest rates. It's one of the mechanisms to bring down inflation. There's also been an alternative argument to say that some of the inflation is caused by increase in rents. And therefore, what about increasing the number of properties that are being built so that there's more supply on the market, which will bring down those increasing rental prices. So they're certainly having an impact on the household cost of living. But is it the fault of the RBA? Well, it depends if you go right back and say, well, why are we in this inflation situation at the moment? It's not only to do with rent increases, it's also to do with the quantitative easing that the RBA engaged in for 12 to 18 months.
What happens if it keeps going this way, though? If people are dipping into their savings, if income isn't keeping up with cost of living pressures, where does this go over coming months?
It's going to become tougher, a lot tougher. How long can people survive living off their savings? I mean, one of the things in Australia is that people households putting money into their super is put at the top of the list, and that's obviously very important. But what I've seen is that it seems to be less important putting money into savings. So, even putting in a savings ratio of 5%, which is essentially the amount of savings you put into your account every month versus your disposable income, I was quite low. So it's going to be difficult because how long will those savings last for? And I don't know, have kind of liquid cash sitting there that they can fall back on. If they're coming from the UK, where there's been multiple recessions, just kind of cyclical, boom bust. I've always been in a position where I put 3 lines of defence and have a certain level of liquidity sitting there, so that if difficult situations do occur, I'm able to dip into those savings and kind of reduce some of the pressure.
Yeah, well, I mean, it's the ideal situation. But what are some of the possible solutions for people who right now are having to dip into their savings? Is this the time that they need to be looking at where they're living and wondering if they need to be moving further out? I mean, these are crazy situations that we're looking at. It seems that we are at end of days for a lot of people's lifestyles.
Discretionary purchases, people will need to look at what is important to them. You know, the leased car that is top of the range. Do they really need that? Can they downgrade that and get something else that still gets them A to B, but it's going to cost a lot less? You know, going out and buying something new because it's something else is a couple of years old. Do they really need that? Potentially getting things that might be secondhand. I think really drawing up a budget and working out exactly what you need and when you need it, some kind of forecast, will help a lot of families to work out what is the funding gap, what are they bringing in, what is the gap, what do they really need. You know, it's difficult as well. You got families with maybe 2, 3 kids at private schooling.
Well, I mean,
That's
it does
expensive.
sound a bit like you're kind of circling the drain when you get to that point, but that'll be a topic for another time. We've got to leave it there, unfortunately. Will Banks, always appreciate your time. Thank you.
Thank you.
That's a program for now. For more, you can head to tickernews.co.